Good afternoon and welcome to the Northern Bear PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to CEO John Davies. Good afternoon to you.
Good afternoon. Thank you, Alex. Welcome, everybody, and thanks for joining us on today's presentation. And we hope you find it very useful and informative. I'm John Davies. I'm the CEO in the business, and with me is my colleague, Julian Davis. He's CFO. So what I'd like to do today would be to just run through, first of all, what we're going to cover in this presentation, just to give you a flavour of what we're going to be doing. So we're going to give a brief overview of the group and just give an introduction to the businesses, so everybody's got a good idea of what the group consists of. We're then going to cover highlights of last year. I'll cover strategic highlights and milestones, and Julian will cover financial highlights. Then Julian will move on to financial performance for the year, and then I'll carry out strategic and operational update, and then we'll finish off with questions. So the group is 10 autonomous businesses. It's pretty unique in the north of England, to be fair. We have within the group 3 of the largest roofing contractors in the north of England, Jennings, Wensleys and Springs. We've got 2 main contractor businesses, very much SME, but main contractor delivery in MGM and RCAS. 3 specialist contractors, is Peels, which I'll cover later, but obviously Isola and Listers. A material handling business, which is based in the northeast and mainly hires, sells, leases forklift trucks to various clients throughout the north of England. And finally, we've got a training and health and safety business, which carries out external works and also supports the group. The clients for the group, they're a good mix of public sector and blue chip private clients, mainly in the affordable housing, private housing, local authority, health, education, and again, the private sector. And the group supports the 10 autonomous businesses strategically, providing guidance and also financial consolidation. So I'll just cover the highlights operationally of where we are and what's been happening in the year. So it's been a bit of a transitional year, as you can imagine. It's a new executive team in place with myself and Julian. Julian's only been in the business 2 months, but I've been in over a year. Obviously, it's provided lots of challenges and learning, but the main thing that's come out throughout everything is a positivity of the teams and the businesses which are within the group. So that's been a fantastic thing to have, particularly for myself coming into the group to start. One of the things has been to raise aspirations in the business. We've done that by investing in staff, resources and training. Clear messaging, although there was clear messaging in, but I've increased that through management information, reporting and structured meetings throughout the business to really get that 2-way communication going between group and the individual businesses. We've also been supportive and brought in more governance and processes through ISOs, and we've also worked with the teams to select new markets where we could grow into. The market's pretty stable. It's not flying away, but what we have done is targeted areas within the market which has got growth in it. I think key to this last year's performance has been the fact we didn't drop any margin when we went to win work, so turnover's gone up, but we haven't had to cut any margin to do that because we're pretty selective. Obviously, one of the key businesses is fire stopping. We've had a focus on that, and we've moved the fire stopping business Isola into a brand new facility in Durham with a training facility, and they're now last year started a cautiously moving to national delivery. Another area in the year which has been a real highlight has been the MCS and decarbonisation. So our roofing contract, as one of them, achieved MCS accreditation, which enabled it to carry out photovoltaic cell installations on roofs on new builds. That's been really good. And also Listers has really driven into markets with the health sector with regards to decarbonisation. Listers being our electrical contractor. I think one of the other things is that's really tied up with raising the aspirations of the people who's been in the premises, and we have invested, as I said before, in the ISIS premises, but also a brand new depot for Wednesday roofing and further upgrades to other businesses. So all of that's lifted the business throughout the course of the year. One of the final thing is we're not afraid to make changes. So obviously Peels really had an issue and were successful before COVID, but didn't make after COVID. The market hasn't come back. It's been very limited. So we invested for 9 months in the year to try and bring the business back, but it became apparent that market was very, very tight they were in refurbishment sector, particularly in hotels. And also the team couldn't really cope with that level of margin. So we made a difficult decision to close Peels down, but we made the decision nonetheless. Now I'm going to hand over to Julian to cover financial highlights.
Hi, good afternoon, everyone. As an introduction, I'm just going to run through this summary slide, and then I'll go through what sits behind some of the key figures in following slides in the presentation. The year, as can be shown on this summary on the various figures, is a story of revenue, margin, and profit growth in the 12 months. We're very pleased that the adjusted operating profit figure is £3.8 million, which is a significant increase on previous years. Now that 3.8 million is made up of 3.4 million, but an add back of the provisions in relation to the closure of the Peels business of 0.4 million to give us 3.8 million adjusted profit for the year. Those profits have then turned into cash through strong operating cash flows. So the cash flow before financing this year was £6 million, which was significantly up on last year. And we've ended up in a much stronger cash position, with a net cash position being just over 4.5 million higher this year than the same time last year. So the overall financial performance I've just broken down into a few areas. I'm going to just cover off very briefly long-term financial performance, summary with a bit more detail on the trading performance, profit and loss performance for the year, pick up a bit on the balance sheet, something on cash performance, and then at the end just pick up on dividends, the historic and the proposal for the current year. So on the 5-year performance, it's all, the overall trends are very positive. So on all the measures, revenue, profitability, and gross margin and adjusted profit are all showing a strong growth trend over the 5-year period. On revenue in particular, there's a compound annual growth rate of 12.2%, which is really strong, and gross profit margins have actually increased from 7.4% or 17.2%, in 2021 to 24.6% in 2025. So that's a 7.4% increase, and reflects the underlying strength that's been developed in the trading businesses. And there are fluctuations within the 5 years, but as I say, the overall trend in all the metrics are positive. So on the group income statement, again, this is just a very summarised version of it. Headline I'd pick up from here is the profit before interest and tax, or operating profit as it's shown on here, of 3.4 million. Now that's in line with the top end of the expected outcome that was communicated in March this year. And revenue and underlying that is revenue and growth and margin growth across all the divisions within the group. And we'll touch on some of those separately later on. One point to note on here is a focus area for the group is the operating costs have increased during the year from 24 to 25, and that's due to investment in people and teams required to deliver the growth in the current year. Plus, as the business has grown, there's been general increases in overheads at the same time. The 3.4 million operating profit, when adjusted, is 3.8 million. And I think I mentioned before, there's some small amortization add backs in there for the current year, but the main add back is a 444,000 provision that was made in relation to the cost of the closure of the Peels business. And expectations for the current financial year to March 2026 is of a similar level of profit before interest and tax to this year. So we're looking for a year of consolidation from there, following the excellent results of the current year. Then to give a little bit more background and flavour to the operating profit for the current year, you'll see this is a simple bridge that we've pulled together. It takes us from the £2.4 million profit in 2024 to 3.4 million in 2025. I'll just touch on each of the blocks very quickly. The 97 positive on corporate is as a result of managing head office and PLC costs. So we've been successful in doing that. So that's ended up with a very small positive variance. Roofing and material handling businesses, they're both well-established business and performed well. Material handling has been steady again, cash generative, and generated cash to allow us to invest further in the fleet. And the roofing businesses activity levels are actually up this year. So there's increased volumes. We've been able to generate additional value, as John mentioned, through the PV, photovoltaic offering and integration into our roofing systems. The dotted red box towards the right-hand side of this chart, all three of the blocks within there, the businesses, is our building services division. Isola has had strong performance during the year and what has been a good market helped by regulatory change. And again, that's something that John will cover in a little bit more detail in the strategy and operational update section later. The contracting businesses that sit within the group have performed well. Revenues, we'll come on to the revenues later on, but the revenues are down slightly for those businesses combined, but profitability it has increased. Some problematic contracts from previous years have been finished, and we now have a good mix of contracts and customers in both those businesses across public and private sector. And then the only red block, thankfully, on this chart is in relation to Peels, and that's the costs, the further trading losses and the closure cost of that business in the 12 months. So overall, the bridge, as I say, takes us from the 2.4 million of last year to the 3.4 million that's been reported this year. Then rather than go through all the divisions of the business, I just thought it would just helpful just to pull out one of the main ones, which is the building services division. This includes Isola, the contracting businesses, MGM and RCAS, Listers, our electrical contractor, and Northern Bear Safety, which is our in-house health and safety team. As I mentioned running through the previous slide, the revenue in the building services division overall is down slightly, and that's a reduction in the revenue in the contracting businesses, but offset by a strong performance by Isola. But if you look on the couple of charts on there on the operating profit and operating margin, they're showing an overall significant increase, and that's as a result of Isola's strong performance, but also the reduction in volumes and revenues in the contracting businesses has been offset by an improvement in gross margin as a result of the fall away of those more problematic contracts from previous years and the better mix of contracts that we've got going forwards. So onto the balance sheet. There's only 3 or 4 points really I'd pull out on this one. One is for business of this nature, I think it's a strong balance sheet with net assets of 22.3 million and a strong cash position with 4 million of cash, and bank loans are only just under 1.5 million. Return on capital employed has also increased during the year from 9.6 to 13.3, which is as a result of the improved profitability of the trading entities and demonstrates an efficient use of the assets to generate revenue and profit within the group. The hire fleet at just under 4 million has increased 3.7 to 4 million, and that is as a result of further investment in that fleet, where we find that long-term hires in that business are very strong from a cash generative perspective. And then the last point, I touched on it briefly before, was the positive cash position with £4 million in cash at the year end, which is an increase of 3 million from the previous year. And I'll just touch on that in the following slide, where I pulled together a simple cash bridge, which is taking us from the March 24 cash balance of just under 1 million to the March 25 of just under 4 million. The big green bar on the left-hand side with 7.7 million in is cash from operations. Now that's a reflection of the ability of the group to manage its working capital, and it's been very successful in turning profits in the year into cash. There is some that sits behind there from the end of the previous financial year, and the timing of Easter resulted in some cash that would normally have been collected in the 24 financial period being collected very early in the 25 period. So that helped just boost that cash position at the start of the year. Then as we go through the chart and work from left to right, the next key point I'd pick on there is the net capital expenditure. So there's just under £1.5 million of capital expenditure, and the vast majority of that relates to the material handling business. So that's further investment in fleet. So moving on, loan repayments. This is, I think, a good news story for the business. So included within the 1.7 million are 750,000 of quarterly loan repayments, which are the standard scheduled repayments agreed with Virgin Money. But what we've also been able to do is pay an additional £1 million of that loan down during the year, with those repayments being made out of surplus operating cash flows. And then I just touch on the last little red blob in there, which is the dividends. So the dividend in the previous year was 2p per share, and the total cost of the business, that was 275,000. So adding up the effect across that chart, say, it takes us from just under £1 million to just under £4 million in cash, which puts us in a very strong cash position at the start of the financial year ended March 26. So the last slide, I was just going to pick up on the financial performance. We just labelled it returns to shareholders. And September 24, that dividend that was paid was a 2% ordinary dividend. But then in December 24, we made a significant return to shareholders with a share buyback of 3.1 million, funded by a £3.5 million loan from Virgin Money. What we're proposing for this year, based on the performance and the results, and for the September 25 dividend, is a 2.5p dividend per share, an ordinary dividend of 2.5p per share, sorry, and a 1p per share special dividend. Now that 1p special dividend reflects the exceptional trading result for the year, and that will take the total cost of the dividends to around just under £500,000 for the year. So what I'll do now is I'll just hand back to John, who's going to pick up on strategic and operational matters.
Thanks, Julian. So I thought what we would first of all do is we'll just cover some of the key strategic drivers. You just move it. So these are absolutely core to our business in the group. Some of these were in place over 12 months ago and before, and some weren't. But this has been the driver through last year and will continue to be the drivers through this year. So the first one, obviously, recognise and reward the success of our people. We've got over 400 employees, and the retainment of them and ensuring they're motivated, absolutely paramount to the group and its success. Investing for growth, I think that came through and will come through in what we've done, and that's been mentioned in some of our other reports which have been out. Improve communication to the business. We've had that, as I said, through various management meetings and structures we put in place. Focus on cash generation. I think from Julian's second last slide, you'd see how important that is to the group. And really that's a thing called cash back profits, which I firmly believe in, and that's what we need to always drive for. Public-private client balance, that was in the group already, but we must maintain that as we grow. And the bottom two are really, really key in my mind, and this is improving the quality of the opportunity and upvaluing our offering, which are very much tied together. But that basically means that we provide a better service and get better rewarded for the service we provide, and always taking that angle and looking at that whatever we deliver. So we'll just move on to the building services business. So what we've done is we've got emerging trends. You can see the businesses in there: RCAS, Northern Bear State, the MGM, J-Listers, Electrical. And emerging trends coming out of this sector really are the client funding. There's a lot of public sector funding coming through. There's more growth coming through on housing, particularly affordable housing. We'll see that starting to be released and progress. Increased prevalence of the public sector work, decarbonisation. That's really starting to come through as well. Although it has been slow, that's starting to push through, particularly in health and education. And on the other side of that, we've got a lot of more increased regulation coming through in this sector. So those are the trends we see. But in order to counter that, I'll just run through some of the strategic focuses we'll put in this sector of our business. So raising the profile, a good example of that will be RCAS rebranded in 2024. And we've really put a focus out in the blue chip clients, refurbishment projects, high-level delivery and fast-track delivery. And that's been paying dividends in the Northeast with some good clients and good contracts coming through from where they were before. The carbon reduction offering for education and health. Listers have been marketing that for the last 18 months, and over the last 6 months, we've seen progress on that, and major contracts have been won for solar within York University and also LED lighting with Leeds Health Trust. So I can see that continuing going forward. Up our value offer, the best way to describe this would be to give an example. We have signed up an exclusive contract with a business called Husk, who actually deliver a patented process, which we can convert disused garage sites in old affordable housing locations or council house garage sites into bungalows without needing full planning permission. And that means that can be done within 18 months and without all of the planning restrictions in place. So that's a real positive for the business and something we're pushing. And again, that puts us into gives us a USP basically in the marketplace. And that means we're adding value to the clients, and there should be more reward for that. So we're going back to those strategies which I went through before. Framework public sector contracts start to come to the fore. We must ensure we're professional and we're tied up for that. So there's been heavy investment in the last 12 months in ISOs, quality controls and submissions of improvements for tenders. So big investment in people on that side over the last 12 months, and that should put us in a better position. Investment-led growth. Obviously, we've been tied a little bit with the loan that we've been carrying, where we put 3.1 million back into the shareholders. So what we've done, and this is a good example of this, is we've had a startup called Callisto Glass Facades, which is a brand within MGM with its own director in charge of it. And we run that with separate accounts, and we're running that within MGM though, but eventually within 12 to 18 months, that should come out as a standalone business. And that's a way of getting some organic growth, if you like, or new growth without having to spend any money. So that's the type of thing we've been looking at, just to look at things, if you like, in the left field. Health and safety training, obviously, big push from the government on CITB grants and further training and encourage people in the construction sector. Our health and safety and training business looks at that, and they provide support to all the businesses that we've been looking at to achieve what they can to actually get, recruit people and train people up. ISLA. So emerging trends, obviously increased regulatory drivers. So the Building Safety Act has impacted everybody in the construction sector, private and public sector. Building owners, because of this now, are responsible for their buildings and if they're safe or not, which again is a major stream of work that we're looking at. This is all down to Grenfell. And also the massive tier 1 contractors who are international and national have major issues around this Building Safety Act and having to carry out major refurbishment works. We're well placed to carry out that type of work for them. So those are the emerging trends. And basically where that is, this is all about sustainable growth for ISLA. So we've installed a compliance team into the business at a real heavy cost in excess of £200,000. But that enables us to provide a one-stop shop to some of these clients and building owners where we can provide a solution to any issues they've got with regards to fire stopping, which again is about upvaluing our offer and should bring further value in. We are developing strategies and doing some small amount of delivery nationally for clients. But actually what we want to do is we want to develop our public sector base, if you like, nationally and in the south of the country. So we'll balance off so that we get some more sustainable work with long-term frameworks as well as working for those private clients. So that's a strategy that we'll be looking to going forward. And training and accreditation, as I said, 12 months ago, there was a big investment in their depot and office, and that continues. And there's a training depot in there, probably one of a kind in the north of England, to be fair. And that continues to be a major selling point for the business. Thanks, Judy. Roofing. So these are mature businesses and in many ways the foundation stones of Northern Bear because of the first businesses in the group. So emerging trends, there's a strong pipeline of new build housing and retrofitting programs with affordable housing. There's a rising demand of solar PV installations and being integrated into the roofing. And also there's an increase in capital expenditure to local government and national government, because there's been a lack of investment, as we all know, for the last 10 to 14 years, and now the buildings need to be put right, and that's starting to come through, particularly in the school sector and education sector, where there's a lot of work coming through. So those are the sort of trends we're seeing. So how we've dealt with that is we managed to get for Wednesday's MCS accreditation, which has taken 12 months, and they now are able to deliver full PV on a roof in one visit while the roof tiles are being installed, and sign that off, provide that to the new house builder. So what that does for the business, it nearly doubles the price of a roof, but also means that work's carried out in one visit, which is a benefit to Wensley, but also a benefit, as you can imagine, to the house builder. So that's been a real positive, and that's starting really push on now in the business. Because of that, we've had to invest in growth, and we've had to put a new depot, so they'll be moving into a new depot in the next couple of months to facilitate the PV installations, but also raises the company profile, and it also raises the aspirations of the staff and the management team there, which is great. Developing house builder partnerships. I think this is going to be key on the private sector. Private sector housing at the minute has a massive shortage of trades and subcontractors to deliver, but a massive market for housing. And I do believe that we'll be able to develop where we get 2 to 3 year frameworks with the house builders, and that's where it's looking, because actually we've got the trades that are required to complete the houses, and that's something we're working on as we speak with our clients. You have a balanced portfolio of clients, private, public, really strong. That's always been the case, and long may it continue. And we also, the one thing we do, although all 3 businesses are autonomous, we bring the supply chain together, so we maximise our buying power, if you like, through volume with the roof suppliers and the tile suppliers, so that if there's any issues, we can count on them to deliver us. Thanks, Julie. So Alcor is our material handling business. I'll just go through the emerging trends. So what we've got is there's obviously a big push towards electrical vehicles in there. Clients are wanting more increased outsourcing, so they want the full package. They don't really want to be involved in anything to do with the forklift apart from employing the driver, and sometimes not even that. Greater telematics in there for efficiencies and logistics. And on the negative in there, we do have the Chinese product coming into the country, into the UK, and it's pretty aggressive with the marketing and the pricing that the Chinese products are giving. So the strategies we've got around that is really, we're trying to offer a higher value offer to our clients, because we're the franchisee for Mitsubishi, which are classed, if you like, as the, let's say, the Audi forklift trucks or whatever, or the BMW or whatever it is, but the high level. So we're trying to offer that high level value. So we will do full leasing, and we'll basically run the forklift, maintain the forklift, train their drivers, and then we'll buy them back from them at the end of the term, which has a big attraction to some of the clients. Obviously, we've got the electrification of the forklifts, and all of our engineers are trained up on that now. Short-term hire, we maximise what we have, because when we get a buyback, we'll either resell or we will actually rehire short-term hires with them to absolutely maximise what we can do with our balance sheet. Operator training, we provide that to all of our clients, full operator training, fully up to date with all of the telematics. And also what we're looking at going forward is a wider offering, just because there's a little bit of tension with the product offer coming out. So looking at racking systems and cleaning systems to our existing warehouse clients to see if we can widen our offering to them. So just to move on really to potential acquisitions and where we are with that. Where we are is we're paying the debt off. That will be paid off shortly. But then we'll be looking at businesses, and we really look to establish businesses. In our mind, businesses where we can add something and improve that business, improve the business if they come into the group, is absolutely paramount. They must have a balanced mix of blue chip and private and public sector clients. We need them to be resilient and to have their own labour and management teams. We have many businesses come into our group to try and see if we're interested, where the management team want to disappear, which is no good for us or anybody. We must have the management team in place, and they must have the resources. So the type of businesses we're looking for is really in the fire solutions area, additional roofing, affordable housing, and obviously businesses linked with decarbonisation. maybe alternative to electric, but we look at that. So finally, key points. The overall trading performance has been good, and the key features of that have been growth in both the revenue and the margin. All the divisions are delivering operating growth for the prior year, and you can see where we had to make a change with PLC, for example. We've made the change. We're looking at diversifying our customers and sectors. We've got strong cash generation from the trades, and we're managing to pay down the bank loans in an accelerated manner. We're going to continue to develop a wider offering of the balanced mix of client base. We're going to continue to invest offers of higher value services. And we're going to look at the building services group to see where we get more growth in geography and also sustainable growth in the ISOLA business, which is apparent, but it must be sustainable and it must be compliant. And in the year, obviously, we've increased the proposed dividend, which is 2.5 pence, plus a special dividend of 1 pence, as Julian said before. And we're pretty confident that the market is holding up for 2026 expectations. So on that, I think thanks for your patience, and we'll go on to some questions now.
That's fantastic, John. Julian, thank you very much indeed for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. John, Julian, as you can see, we have received a number of questions throughout today's presentation. And if I may now hand back to you and kindly ask you to read out the questions where appropriate to do so, and I'll pick up from you both at the end. Thank you.
Yeah. Thanks, Alex. So one of the questions we've got is, how do you see the new product development, e.g. glass walls, solar panels, and how big an opportunity is this for you, and what sort of level of investment is required? So just in answering that question, I'll cover off the roof, photovoltaic. Investment in areas between 100 to 200,000. The market's there and open. We've already got Wensley's already have MCS accreditation. Springs Roofing will have it by the end of the year. And what I see there is I see an increase in turnover across a group of 2 to 3 million, and I see the effect on the businesses of 10% profit increase going forward. Callisto, slightly different. Very little investment in terms of real cash in there. It's a startup business. But I would like to think that in 2 to 3 years' time, we'll have a business who can produce 300,000 to 400,000 PBT. So well worth doing, but not a massive profit centre for the business. Another question is, ISOLA is a strong performer. What do you see this group looking like in 3 years, and will it continue to expand? So looking at 2025, it turned over 10.5 million. But what it was doing was maximising its potential ability to make profit with the market. How we see that developing is turnover, yes, may go up. Profits may not follow, but what we will have is long-term frameworks and sustainable profits that could be repeated over many years, which would be key, and also protect the group in which it delivers its services, because obviously it's highly regimented and highly process-driven. Another question, would you consider acquisition as the share price rises? Are there any geographies, new industries you'd like to go into? Well, as the share price rises, obviously it's in our position is to increase that shareholder value again. So yes, we will be looking at acquisitions. Having said that, the level of the share price doesn't really affect our acquisitions. It's more on where we are with the bank and cash. But the focus for us on acquisition is the business fit for our group, and will it bring a benefit, and will we be able to grow the business? So that's absolutely paramount to us. So if you just bear with me, I'm just Julian's got any questions?
Yeah, there's a question on there where it says, if not previously covered, can you share your plans for the dividend? Then we've touched on that in the presentation with the 2.5 and the 1 pence special dividend for the year. So it's jumping around. So we've got a question. Congratulations on the results. which are not only a result of the weather, but testament to the hard work that you put in. Now that the business generates quite a bit of cash, please elaborate on how you'd like to allocate it.
Yeah.
I think an initial point, as John's mentioned already, is part of that will be returned to shareholders in forms of the dividend. And then another key driver and a key use for that cash will be paying down the debt. And after that, as I mentioned, if strategic opportunities come up, potential acquisitions are made up of that, but that's more longer term.
I think that with the market, the way the market's travelling, that investment's key, and I think that came through the presentation. So we will be paying out to shareholders, and we will be looking to pay the loan off as quick as we can. We will also be looking to invest wherever we can to bring further growth to the business and further opportunities.
Okay, there's another question. In the past, you mentioned further financing options for the materials handling business. What will this look like for the coming year and beyond? That's something as one of the projects I'm picking up. I've had a couple of months here now, settled in and got through the year end and the year end audit and the results. But it's one of the areas I'm going to look at within the business. It seems to work very well at the moment, but I'm sure there are efficiencies within there, and we'll pick that up in the coming months.
I've got a question here, which is, in October, you were awarded 1 million shares on the option of 52 pence. Have you any plans to issue more? Well, the simple answer to that is yes. We must retain our key people in the business, and we will be. And what it does, it aligns them, obviously, to shareholders in the business as well. And it is absolutely key for retention. So we'll be looking at that in the next 6 to 8 months, and looking at further schemes.
Okay. This question, the overdraft facility is committed to October 2026. What is the timeline on extending this? We've actually just renewed our overdraft facility, and that runs till June 26. The relationship with Virgin Money is good. It wasn't a difficult conversation to renew that overdraft facility, so I think, and they're very supportive of us and what we're doing, and particularly with the results. So I don't think we'd have any problems in renewing that when it's come for renewal next time.
Just go down. There's one on how scalable is fire protection. It's a fire protection opportunity beyond the northeast, and when do you expect the division's compliance investment to deliver returns? Well, the compliance investment's twofold. The investment's there to make us more compliant. But as probably everybody's aware, if we become even more compliant, and we can demonstrate that the clients who have major issues, therefore that becomes a tool that will sell the business and open up the market for us. The issue we have is operatives and resource, and that takes a lot longer. So hence the strategy of increasing the value of what we offer. So if we've got 100 guys working on ISA, I'd rather work on high value solutions to clients than, for example, working as a subcontractor to a main contractor. So we do see profits continue to increase. Might not be at the level of have increased in the last 12 months, but that investment will pay off. The long game will be to increase the resource in there.
So there are some questions that are quite wordy and long, but we'll probably have to come back on those, or we'll be reading them out.
Yeah. How much of 26 revenue is already contracted? It's we measure it slightly different within the group compared to a tier 1 contractor, for example, because of the nature of it with roofing contractors. But we're on a par and pretty level, to be fair, in terms of the market. So there's no massive increase in there. There's no indication that is going to increase, apart from things that we change by our own volition, i.e. increase the value of what we do, put PV on the roof, do more decarbonisation schemes. So it's really in our hands, but in the northeast, certainly in the northeast and in Yorkshire, we don't see any massive upturn in the market as yet.
There's a couple of questions we've got about expected capital expenditure for next year. I don't think, well, it won't be a bigger number than last year, and it's something that we continually review. And it will come into sort of that balance of looking at the financing options that we talked about earlier in the hire fleet and working in the most efficient way and the most efficient balance of that.
I think I've answered that one. suppose there's one on gross margin there, which I could answer. The gross margin within the group is strange because we have transactional businesses in the roofing, for example. This isn't a traditional overhead, and there's a lot of cost attached above the gross margin, and it's something we're looking at. But unfortunately, we cannot allocate everything to site because the transactions are too small. So we do have, compared to our peers, a higher overhead and a higher gross margin because we've got site costs within there because of the transactional nature of the business. So it is something we'll look at, but obviously if we increase the turnover, that cost will tend to go up.
Okay. Question, did I hear you correctly that you're going to repay all of the 1.45 million of bank loans? Does this mean that any acquisitions are likely to be done for shares rather than cash? I think that is very much dependent on the timing and the size of any potential acquisition. And we just have to review that as the opportunities come up. I don't think there'll be a definite answer to that one, unfortunately.
It's good out of Freddie there. Can you say the total staff headcount? Can you say what the total headcount is at the year end, and how do you see it developing in the new financial year? We see it increasing. It's over 400. I think it's about 420, 425. We see it increasing over the course of the year, but that will be via recruitment, and that's limited and takes time. So I could see 5 to 10% being added maximum. Well, 10% is probably too much. 5% added over the course of the year.
There's a second part of that question. Are the contracts from Peel now absorbed into the wider group, likely to be additive to the new year profitability?
No, there wasn't. There was a cut off on the contracts, and no contracts have carried across into the year end. The only thing the group is doing now is administering retention collections, and we've made provision within our figures for any costs associated with Peels.
Yeah, and there's only a small amount of cost coming through, but nothing really significant.
So Peels are really. I suppose if you answered the material handling, so in the material handling business, there has been a large capex investment in new fleet over the last few years. Will this continue? Well, our view is we'll restrict this really to what they produce on EBITDA or something like that, and we'll use more because there's more of a push, as we mentioned in the strategy for clients to want a full leasing agreement. We'll mix that up with the lease agreements with Mitsubishi, and there could well be not, but I don't see the balance sheet reducing over the years. I think that'll be maintained, but I don't think it'll continue to increase.
Question there.
All right. So this is a good one for me, coming from the Northeast. Do you think that the company's focus on the Northeast is a strategic strength or weakness? I think it's a strength because the businesses are mature and have a good market share in the Northeast. There is more money to be made in other regions, but you have to have control when you move out of regions. Hence, I've said that Iceland, who do have the ability to move out of the region, are very, very cautious in their approach because there's absolutely no point expanding the business and not making any profit. So we are cautious. We will look to move out, but that's dependent on the opportunity.
Yeah, the question, what are the 2026 financial expectations? I think I touched on that, and we're expecting a profit before interest and tax level, a similar level to the current financial year. So we're looking for another good year of solid performance.
I think we'll answer that.
One. What was the rationale for a special dividend payment? So that is as a result of the results being so strong for the current year. So we kept the core ordinary dividend in place, but we gave a top up of just 1 pence due to the performance and the availability of cash.
Yes, that's an easy one to answer.
What's the matter?
Well, for 26, yeah.
Yeah. So congratulations on great results and cash conversion. When will your broker be providing new forecasts for 26 and 27, please? we're hoping to get something out either later today or I think tomorrow. We're working with them on that at the moment, so we'll get that out as soon as we can.
Just the one on what's that? Would you invest further in your fleet of equipment to hire? Is this currently mostly focused on material handling? Forklifts, yes, it's highly specialised in material handling and forklifts, and probably the specialists of the team are there. And yeah, I don't think we've got the ability in there to widen it too much, apart from what I mentioned before, as in linked with warehouse working. But what we are doing is we're looking to see if we can do some bigger deals with some bigger clients, given the investment we put into it. So that's one area I'll look to try and push. Impact the national living wage. What was that? What's the impact of the national living wage and national insurance increases? I suppose in some respects, with most of our contract sizes being quite small, it's positive for us because turnover goes up, because we, as a business, as soon as we know about it, we change our pricing policies to reflect that and pass the costs on, which is unfortunate for the clients. So when that happened, if you like, last year, we went round and we ensured that all the businesses reflected the new hourly rates and tenders, prices, and also it's a legislative change. So even if you're on a framework, you have the ability to get an increase for that. So very little impact. The return on capital.
Yeah, is there a return on capital or return on investment threshold that you target when appraising acquisitions? I don't think there'd be anything as formulaic as that. I think it's more of in terms of, as John talked in the presentation, around how good a fit it would be for the business, the resilience and the ability for us to add value to that. Again, it will depend on the sector, and
I think that came throughout our presentation. We like to add value to businesses, and that's the key criteria for us. I think we're about done.
Yeah, we're at the bottom.
Yeah, I think we're at the bottom now, Alex, on questions.
That's correct. John, Julian, thank you very much indeed for addressing those questions for investors today. And of course, the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. But before redirecting investors to provide you with their feedback, which is particularly important to the company, John, could I please ask you for a few closing comments?
Yeah, certainly. It's been a pleasure presenting everybody. We're really excited about the business. I hope that comes through in the presentation. I think we've got good things to come. We are a Northeast business, and Northeast businesses are used to working in tight markets. So in some regards, that's good. But we do seem to have some businesses here where we're pushing strategically, where we get some decent growth and also add some value. So thank you very much for your time.
Yeah, thank you.
Fantastic. John, Julian, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Northern Bear PLC, we would like to thank you for attending today's presentation, and good afternoon to you all.
Thank you.